think we're going to have a busy day today. We're going to be talking about Naspers. The intent was to talk about Naspers this week and Prosus next week. But you really can't talk the one without the other, like Matt said. So we're going to be discussing Naspers and Prosus and the results and the deal or the restructuring that they're talking about. Then Shaun's going to do a little technical for us and tell us what he sees on Naspers and Prosus. We're going to have the Q&A, and then I owe you the explanation or the little explanation of the derivatives and how to use derivatives. I think it's too much to cover in one session, so we're going to touch quickly on the basics of it today. And I think, like I said to Matt before the meeting, we're going to carry on with this and do a part 2 next week. So I think let's get cracking, Matt. Take us through the Naspers Prosus results, and then we take it from there. Thank you.
Thank you, Sarel, and good morning, everyone. Today, as Sarel said, we'll talk about Naspers and Prosus. There was quite a lot to announced earlier in the week when they came out with the results. So today's session will break into 2 parts. So today we'll chat about the results, and then next week we'll chat about the collapsing of the cross-holding structure. But when we get to Q&A, if there are any questions on the cross-holding structure, I will answer them. Okay, so just the event was the announcement of the end-of-year results for the 2023 financial year. And then in a separate announcement, they also announced their intention to remove the cross-holding structure. In terms of the impact on, it was received positively by the market. Naspers shares increased by 9%, Prosus increased 6%. And then our assessment of everything. So we view the collapse of the cross-holding structure as positive. It simplifies a very complicated structure. As a result, we've decreased our holding company discount applied. And basically, the way we value Naspers and Prosus has remained unchanged, except for that holding company discount. So it's resulted in an increase of the intrinsic value. Prosus, it's at 1,265 and Naspers at 3,030. And we previously had a hold recommendation, and we are keeping that. So just a highlight on the event. So total economic interest revenue decreased by 5% for Naspers and Prosus. And then consolidated revenue increased by 8% for Naspers and by 10% for Prosus. So just to unpack that a little bit, on an economic interest, revenue declined by 5.2%, and 14% of that was driven by the decline in revenues from the social and internet platforms portfolio. So that's Tencent and VK, which they've exited. And then the e-commerce portfolio, which increased by 22%. And that was driven by growth in food delivery. So food delivery was up by 40%, payments and fintech up 32%, and classifieds was up by 19%. So apart from Tencent, which is the main driver, the e-commerce portfolio had strong growth, but they still had quite big operating losses, which widened by 40%. And that was driven by the e-commerce portfolio. And then when we go to earnings, that was impacted by the following. So share of equity accounts were 44% lower, and that was driven by lower Tencent results. Naspers and Prosus also received substantially lower gains from their sale of Tencent compared to the prior period. So in the prior period, when they sold 2% of Tencent, they made a gain of about $12 billion. And then in this year, they sold it was about 2.6%, and the gain was only about $7 billion. So that's quite a big difference, which contributed to low earnings. And then Prosus also recorded an impairment of equity accounted investments of $1.7 billion. And then, of course, the other event was the announcement of the intention to remove the cross-holding structure. I'm going to unpack this a lot next week, but essentially what they're going to do is, at the moment, the Naspers has 43% economic interest in Prosus, and the Prosus free float shareholders have got 57%. And through the issuance of new shares, the legal ownership of Naspers in Prosus will now be 43%, and the free float shareholders of Prosus will remain at 57%. So essentially nothing changes other than the structure is a lot more simplified. And then, yeah, just looking at the impact. So the top two graphs are, it's got the prices of Naspers and Prosus over 1 month, and you can see that they jumped quite a bit on the results. And then in the bottom chart, I've just got the relative performance of Naspers and Prosus since the Prosus listing. And the dotted line shows the benchmark, which is the JSE Cap 6. And yeah, essentially, if you were a shareholder in Naspers and Prosus, you've had quite a wild and probably emotional ride. And after 3 years, performance is very similar to the JSE Cap 6, which is just plotted along, edged up a little bit higher. So you can see there's been periods of significant outperformance and underperformance for both of them. And then when we get to the valuation, so basically it's the same as we've always valued these companies, but now we've lowered the holding company discount to reflect the simplified structure. At the moment, the listed assets account for roughly 90% of the valuation, and of that, Tencent is roughly 85% of the valuation. So all in all, this company is still driven a lot by Tencent, which itself has got significant risks. And yeah, that leads me to the end of my part. I'll hand over to Shaun now for the technicals, and then we'll take some Q&A before we hand over to Sarel.
Yeah, good morning, everybody. This is a chart, obviously, of Naspers. I took this morning. You see again a bit of a sideways market that's going on for nearly 6 months since the beginning of January. So it's trading above its 21-day and 40-day moving average. So in the medium term, we still call this neutral. You see it's trading way above its 200-day moving average. So the long-term trend is bullish. As Matt was saying, price jumped up on the release of the results. You can see that gap there in that share price, and that gap hasn't closed. You can see it's moving towards that upper resistance trend line, which is what's that, 3,462 Rand. I see this morning it has pulled back a bit, maybe on some profit taking. So yeah, you can see it's been moving sideways for quite a while, for 6 months. It's a trading range between the support at the lower support range. That's first support is about 2,933 Rand. That red line there, and that longer term line just below the 200-day moving average is about 2,848. So you've got about a 600 Rand trading range if the scales are moving up and down sideways. So you can see the bottom, the oscillator at the bottom there, the MACD has just moved into overbought territory, so it's bullish. It's confirming the price action, but as I say, it has started pulling back today. So we'll see how far it goes. Go into Prosus. Very similar chart also, moving sideways. You can see also that very prominent resistance trend line at the top there. That's at 1.455, so that's 3 times already. I don't anticipate it's going all the way up there. Again, you can see that gap on that news. As I say, the main thing here is just that sideways trendless movement. I think people, a sideways consolidation area is usually people waiting for new information. So maybe this little information that came out now might be positive, negative, depends how you take it. There's two camps at this point in time. Stay way above its 200-day moving average. So still very bullish long term. Thank you.
Thank you, Shaun. Thank you, Matt. We're ready to take your questions now. Please switch on your microphone and your camera if you do ask the question in person, but you're welcome to type your questions in the chat. If you have any further questions after this, then please send them to us at wealth@psg.co.za. I was going to ask a question about the holding structure, Matt, but I realize you're going to unpack it for us next week because there's some things about that that I don't think I fully understand. Looking at Shaun's charts, though, I've come to realize that this thing has a trading range of roughly 17%, you know, from bottom to top over a 6-month period, which makes it very, very volatile. It looks like on Naspers, like the 3,000 level is more or less the level to buy it. And I think this the set of results, in my view, Matt, and maybe you can explain to us, is actually quite crappy. It's not a great result, and we knew that there was risk involved with Naspers always because of the main asset being the holdings in Tencent through Prosus. And if Tencent has a hiccup, then Naspers is going to bring us subpar results, and I think this is the case here. So yeah, not a great set of results if you just look at that.
Yeah, I agree. So we've got diluted earnings per share down 40%, headline earnings down 80%, and core headline earnings down 25%. For any other company releasing numbers like that, I'd be highly surprised to see a nearly 10% upward movement in the share price. It remains highly volatile because Tencent itself is volatile, and then at the Prosus Naspers level, management has also got the ability through these really complicated corporate actions to impact the share price. If it wasn't for Tencent holding both of these companies up, and you just had a company that held the non-core assets, which is basically the e-commerce portfolio, it would it's been loss making for a very long time, and it's still continued to be loss making until 2025. So yeah, I also agree they were not great results at all.
Yeah, but that said, the asset in Tencent is significant, and the potential in the Chinese market is still there. So we can't just throw that away. And I suppose as we unpack the cross holding next week, we'll see why the jumping in the share price. I see you still applying a holdco discount of roughly 20%, if I recall.
Yeah, so let me just go back to that slide.
Yeah, I think it was 20%.
Yeah, so we've got our discount is made up of quite a number of discounts. So the holding company discount we've put at 20%, but which is quite low compared to other holding companies. The average holding company discount for South African companies, so I'm talking Remgro, Reinet, and the likes, is closer to 50%. So 20% is quite low, but we add then an additional discount for the VIE risk, because yeah, I mean we've spoken about the VIE risk in the past. Essentially, it's just the risk that China prescribes the VIE structure, because they've never officially taken a stance on that. So that's quite a big risk. And then the strategically sensitive asset discount of 5%, that basically applies to because a lot of the businesses in Tencent are considered to be strategically sensitive to the Chinese government. So they are able to influence those businesses like they have done in the past, like the restrictions on games, which shareholders have got basically no control over. So that's a further discount. And then since Naspers owns Prosus, we also need to apply a holding company discount onto Naspers. So that gets us to 35% on Prosus and 44% on Naspers.
Okay, but a much smaller holdco discount than the rest, as you mentioned. I reckon the long and short of it is the results weren't ideal. The jump is probably a little bit overexciting, and a pullback to Shaun's level of around $3,000 should be considered before we buy Naspers again. But your recommendation is to hold it and see how this thing pans out, see what happens once they remove the cross-holding structure, and people are free to buy and sell shares as they wish. So yeah, I don't see any other questions in the chat. Is there anybody who has a question that they want to maybe ask over the microphone? It doesn't look like it. If you do have a question, just raise your hand and we'll go back there. Thank you, Matt. Thank you, Shaun. I'm going to jump in straight into the derivatives part of things. Like I said, I promised you an explanation of how derivatives work and how we think you can apply it and how people use them in the market. And I specifically put this picture of a mountain bike racing down a hill up here because it's a wild ride when you're in derivatives. So Matt, if you'll go to the first slide for me, I think this is the only one we'll cover for the day. And I'll try and explain derivatives in the following way. So like the name says, a derived instrument or a derivative is the value of it's derived from something underlying. Now, typically the stuff that we trade in is derived from shares listed on the JSE, exchange traded funds, currencies, commodities. It could be an index future. But let me explain it to you in everyday language. Let's say Matt wants to buy from me a Toyota Land Cruiser 2022 model for 2 million Rand, and he says, but Sarel, I'll only have the money in December. I agree to sell him that Toyota at 2 million Rand, and he's going to pay me in December. We agree that Matt and I both put down 200,000 Rand as a good faith deposit for Matt to pitch up and come buy the thing when I want to give it to him in December at 2 million Rand. Now, the risk for me is I don't necessarily have a Land Cruiser to sell Matt, but I have until December, when the delivery date of this contract or the expiration date of our contract is, to get one. If I buy it at a lower price, I then get to make a profit. If I have to purchase, and Matt was right, by fearing that the price may rise and I have to pay more than 2 million Rand, then I'll be at a loss. The derivative in this case is simply a contract between me and Matt to buy something in the future, buy and sell something in the future. The underlying instrument is that Toyota Land Cruiser. Maybe we can explain it like this as well. Use the example of a farmer planting a crop of wheat now. It's July, they're planting crops of wheat. for harvest income October, November, December. And they're afraid that the price of wheat may drop from the current levels. They're quite happy to sell at the current levels. So they would then enter into a contract well, it is a contract. They'd enter into a contract of a derivative with a miller to then sell their crop to them at, let's use the 2,000 Rand again, at an agreed price of 2,000 Rand per ton. Each of them would be required to deposit a good faith deposit, which is called the margin. And then every day's price is then adjusted to what the market price of that underlying instrument is. So let's say the price of wheat moves up, then the miller who has bought the contract will get cash into his account, and the farmer will have cash out of his account with the price rising. But if the price drops, the inverse happens, and the farmer will get the cash and the miller will have to pay in more cash. So the risk of a derivative is that as the underlying instrument moves, your cash is adjusted on a daily basis. The good faith deposit or the margin deposit has to be maintained at all times. And on single stock futures and CFDs, that margin is typically between 15 and 17.5% of the value of the share. So you can then enter into a contract to benefit from prices rising or falling. Either way, settlement only takes place in the future. So like the Toyota, you don't have to own it in order to enter into this contract, but you have to put down the margin and you have to be able to afford the price movements that happen in between. I think in next week's explanation, we'll put down a little table for you to show how the cash moves. But I wanted to get across that a derivative is simply a contract that's entered into. That contract is settled in the future. A margin is payable as a good faith deposit so that both parties perform to this contract. The daily price movements causes variation margin, which causes one party to pay in and the other one to get more cash into their account. And that's done on the basis of mark to market, which is the relevant market price on that day, which forms the basis of this derived instrument anyway. So that in short is what a derivatives contract is. I think next week we'll get into the actual movement of the prices, show you that, and we'll get into the use cases of why would I want to use a derivative when trading the stock exchange. Vessel says, is the farmer mill example not more speculation? What would you say is the difference between derivatives and speculation? Okay, Vessel, good question. The farmer mill example is not speculation. The farmer mill example is a hedge. The current price of wheat is 2,000 Rand. The farmer is happy to sell his future crop at 2,000 Rand, not knowing where the price is going to be when he harvests in November. And the miller has a fixed cost on his inputs. He knows that come November, he'll have wheat to mill at 2,000 Rand a ton, also not knowing where the price is going to be. So the case that I explained regarding the farmer mill is a hedge rather than speculation. If I was to sell wheat at 2,000 Rand, knowing that I don't have anything out there growing, then I would be speculating and taking a dip at prices moving lower, so that I can, in the example of the Toyota, go back, buy that asset at a cheaper price than I agreed to sell it at in the future. Does that explain, Vessel? Yeah, Vessel says, thanks very much. Are there any other questions about the initial explanation on derivatives? So it's simply a contract that's derived from a different asset or an underlying instrument. And that contract has a value, and that contract has good faith deposits or margins, and it's adjusted on a daily basis. and we'll dig deeper next week. So we've already touched on the hedge example, and we've already touched on the speculative example. So let's use Naspers for instance. Let's say the price now, if you go back to Shaun's graph for me quickly, Matt. Let's see, Shaun, where was that Naspers price this morning? It was, what's it, about 3,000, let's call it 3,400 Rand, right? Let's say Naspers is trading at 3,400 and I'm expecting it to go back to 3,000. I can then sell a CFD or a single stock future on Naspers at 3,400. And if I manage to buy it back before the settlement date and prices reach 3,000, then I would have made on that contract 400 Rand. All I would have had to put down in order to sell that contract was 17.5% of 3,400. And I would have been required to have been able to meet the daily movements. Let's say I was lucky, and from the moment that I sold it at 3,400, it just went south. I simply had my margin on the one side, and cash kept getting added to my account all the way down to 3,000 Rand, and then I would buy the contract back. So now I've got a buy and a sell, meaning I have no obligation to deliver to anybody. I hope that explains. Any further questions, guys? We're running out of time. It's 3 minutes before. Doesn't look like it. So next week, what we're going to do is we're going to be talking about the Naspers Prosus cross-holding. Matt's going to unpack that for us and how that's going to work going forward with the issuance of new shares and that. And then I'll dig deeper into this derivatives explanation for you. Please feel welcome to send us questions in advance, especially on the derivatives, so that I can touch on those parts. Send it to wealth@psg.co.za or send it to my personal mailbox, sarel.snyman@psg.co.za. Doesn't look like there are any further questions. Matt, thank you very much for your time and your effort in putting together a great report. If you guys need a copy of the full research report, if you haven't seen it, please also get into contact with us. Otherwise, we'll see you next week. Looking forward to it. Have a fantastic Thursday. Thank you very much. Goodbye.
Thanks, guys. Cheers.